Today we're running through 5 things to look for with any economic release. Economic indicators, economic releases are really useful for informing your view about where the economy is headed. We're going to talk about 5 different things that you might want to look for. Some are pretty straightforward, some are less obvious, so do watch to the end of the video so that you get to hear about all 5. Hello, I'm Peter Martin with Trading 212, and we add educational videos about trading in general to YouTube regularly. If you click on the subscribe button and the alarm bell icon, then you'll get a notification for every new video we add. Well, the first one on the list is one that you need to do before the economic release comes out, and that is to know what the market is expecting. There are various surveys that are conducted of analysts and economists to give you an idea about how Wall Street is expecting economic releases to come out. And this is important because when the actual figure diverges from these expectations is often when you get the largest market moves. I'm just going to show you very quickly here in Trading 212's web app how you can view market expectations for forthcoming economic releases. Over on the right hand side of the screen there is a calendar icon there, and if I click on that it opens up an economic calendar. You'll find a very similar feature in the mobile app as well. So I have got this filtered here just according to high impact releases affecting the US dollar. You can set those filters up any way that you prefer, and we can see here what is forecast and what the previous values are. So we've got United States change in non-farm payrolls for 1:30 p.m. UK time. Forecast 180,000 jobs, and the previous month we had 196,000 added. Number 2 on our list isn't so much something to look out for as a piece of understanding that you need to have in your own mind before the release comes out. And that's understanding how the economic release affects the economy. It doesn't need to be a deep and thorough understanding, really just a broad understanding of what the number means. For example, if you're looking at the consumer price index, to understand that that's inflation, and if you get a very high inflationary number, that has an impact on monetary policy. It could lead to tightening of monetary policy. That could be adverse for the stock market. It might be bullish for, if it's US CPI, on the US dollar. Or if you're looking at non-farm payrolls, understanding that a large payroll number means lots of jobs being added to the economy, which is usually good for economic growth. That's usually taken as being a bullish signal for the stock market, though once again it can have implications for monetary policy. It's also worth understanding the lay of the land at the time that you're looking at it. So it's worth going back over the last 1 or 2 releases and seeing exactly what the market reaction was. Going back a few years when the Fed was pumping a lot of stimulus into the economy, there was a bit of an inversion of normal understanding. It was a situation where bad news was often taken as being good because investors were a bit worried about what might happen when the Fed started tapering back on that stimulus. And if you got a big payroll number, which would normally be considered a good number, at that point there were worries that that could force the hand of the Fed. And sometimes the stock market at that point was reacting not as it normally would. It was reacting a bit negatively if the number came in too strong. In the end, the Fed cut back entirely on that stimulus and the stock market was just fine though. Number 3 on the list is the actual headline number of the release itself. It seems pretty obvious to say this, but I couldn't really exclude it from the list because it is so important. So do look out for the headline number of the release. Number 4 on the list is a little less obvious, which is to look for any kind of core version of the economic release. So for example, going back to the consumer price index, the core version of CPI excludes food and energy prices because these are more volatile components. They tend to whipsaw around from month to month and can actually obscure what's going on in terms of a trend of prices as a whole. If you're looking at durable goods orders, you might want to look at excluding transportation or military orders because those are the more volatile components. Or when you're looking at retail sales, you might want to look excluding autos because once again, that's the more volatile component in that report. So do look out for any kind of core version of the economic release. And number 5 on our list is to look out for any revisions to prior months. Now, not all economic releases are going to have revisions to prior months, but some important reports do, most notably non-farm payrolls. So as well as reporting the headline number for the month itself, it will include revisions for 2 prior months. So for example, the report that we had for non-farm payrolls at the beginning of April included the headline number, which was for March, and then revisions for January and February. Now, this can be really important and sometimes overlooked. For example, let's say that the market is expecting non-farm payroll growth of 200,000 and the headline figure comes in as 200,000. That all sounds fine on the face of it, but if you dig a bit deeper and you see that there was a revision to the 2 prior months net overall of lowered down by 50,000, then actually the report has come in weaker than expected, although on the face of it, it seemed as though it had come in line with expectations. So that was a quick run through of 5 things to look out for with any economic release. I hope you enjoyed the video. If you did, please just take a second to hit the thumbs up button and give us a like. Or if you've got any thoughts that you want to share with us, why not send us a message in the comments section? We do read each one. That's all for now from me, Peter Martin, and Trading 212. Thanks for watching. I'll see you next time. Goodbye.